Hi, in this video, I want to share 5 tips that will improve your ranking results nicely. This video will work for any traders. It doesn't matter if you trade cryptocurrencies or any other assets. It doesn't matter if you are a beginner or an experienced trader. Yes, of course, some of the tips may seem trivial to you, especially if you have some experience in trading, but believe me, judging by my experience, even very many traders who are not the first, second year on the market either do not know about many of these things or ignore them. But in fact, if you focus on what really brings results, all the rules of trading can be reduced to just 5 points. And let's get started without much delay. First tip, know the asset you are trading. I always advise, especially to beginners, not to spread out, not to open a lot of charts, not to try to analyze 10 to 20 assets. Choose 2 or 3 for yourself and make deals only on them. If you trade gold, for example, trade only gold and test different strategies there. It gives you experience and insight into the asset itself. For example, if you trade Bitcoin and open trades on it frequently, you will know how much the chart moves, how the asset reacts to what news, how it reacts to what statistics, where stop losses usually are, levels working, not working, whether a particular strategy is working or not. The more you work on one asset without spreading yourself thin, the better you will know it. The better you will understand at the level of intuition whether it is a breakdown or a rebound, or what to expect in the near future from this schedule. How long can it, for example, go in a trend and without pullbacks? It's very important, on the one hand, that you have had experience with that particular asset, because all assets move differently. If you take the bond market instead of Bitcoin, for example, it will move much less. It will operate under different laws. There will be coupon payment periods, for example, that affect prices too. Here they are not, for example, in Bitcoin. And so all assets are very different. But beyond that, here's this focus on 2 or 3 assets, as workers will help you better deal with the news backdrop. Agree, it is one thing to study all the news of the financial and economic world before trading. Another thing is to go only to the section that deals with cryptocurrencies, see what is the current news, what is the current analytics on your asset, and then start working. You will save a lot of time and make your trading much more efficient. Second tip, use different time frames. Even if your strategy says that you should work only on the 1-hour time frame, always check it on both larger and smaller time frames to better catch the general trend of the chart and more accurately find entry points. The general rule is that on larger time frames we analyze the trend, and on smaller time frames we choose a specific entry point. Let me give you an example. Here's the chart in front of you. Here it is difficult to say whether it is a trend or years. Something at all. The chart does not draw any levels, it moves as if chaotically. But if we look at the bigger picture from a general perspective and switch to a 1-day time frame, we can see that there is a clear trend on the chart. There is a clear trend on the chart, and we need to look for points to trade up and ignore signals down. What's more, we can plot a trend line low here and see that the chart is now in a straight cold line area. We can note key resistance support levels and evaluate the chart structure fully. And on smaller time frames, when we move to smaller time frames, 4 hours, 1 hour, we can already look for specific entry points. Therefore, always work on small and large time frames at the same time. If you have a scalping strategy, you are working on a 1-minute, 5-minute time frame. Look at least at the hourly chart to see the whole picture first. Third rule. It stems from the same thing, that the third rule goes like this. We analyze the structure first, then we look for entry points. Let's go back to the same example. Here we have switched to a higher time frame and can study the structure. We see a trend. We can put up a new line, one support level, right here, for example, a second support level. We see the local low, we see the high, we can label it all. And that's the first step. We analyze the structure. For example, specifically on this chart, we can see that we either have a trend breakout or it's just the chart going out of trend and it's about to go back up. It will happen either from this support level or if the chart goes down and breaks the support, we will already say that there is a new structure in the market. We have a trend reversal, and we will look for deals downwards with the orientation here at the nearest support level. We were the ones who analyzed the structure. That is, whether there is a trend, where the levels are, and so on. The second step in this rule, we are looking for entry points. As I said before, we look for them on the smallest time frames. We can switch to H4 and we can take a closer look. We can come in from here. We can line up some indicator, for example RSI, or some bounce indicator. For example, let's put a stochastic indicator. Let's say you have a stochastic. We can open some indicator and see, we have stochastics at an oversold level. This confirms the possibility of a likely rebound. And so if your strategy matches up well, you can open the trade up. Fourth rule, let's continue on the same chart. Fourth rule, take your time, use only clean signals. If you have 2 or 3 indicators in your strategy, they should definitely be at support, resistance, and so on. Don't try to look for half measures. Don't try to look for charts where you have, for example, one indicator showing a good point to trade up, a support level showing a good point to trade up. And the third, some indicator says no, a breakout is still possible, according to your strategy. And if even one item or piece of news suggests that it's best to abstain from this trade, it's best to abstain. Take your time. You'll have time to make a lot of deals. But if you go in for a large number of deals, there will be a large number of rejects among them. That's why we always look for perfect setups, or close to perfect setups, and only then enter the trade. It was the fourth right. And the fifth rule, in my opinion, is the most important. Always use take profit and stop loss. Let's say if we were to enter a trade up here, right? A stop loss is an order that will automatically stop your trade at a small loss, but it's your insurance in case the market reverses sharply. Stop loss and take profit are the same order that will automatically close the trade, but with a plus. In order to set stop loss and take profit, you must have 2 rules. First, you must specify the risk you are willing to take and the goal you are pursuing. In this chart, we can see that we have a support level below. For example, below this level, we no longer take risks. If it goes lower, it's probably already a reversal. We've assessed the risk. Now we need to evaluate the target. Where this chart may rise, it may rise to the previous trend line level, or it may continue to trend. We can put up about this level. So the first rule within this fifth rule is that in order to set a stop loss and take profit, we need to determine the risk tolerance and the target. The second very important point is that you must have the right risk-reward ratio. In the worst case, your stop loss and take profit should be equal, but this is far from the best case. It is the minimum possible rule. Ideally, your target should be 2-3 times the risk taken. This can be translated into experience, such as business. You will be in a business where you have the risk to lose and the opportunity to earn. They are the same. Moreover, you will lose or gain the same amount of money. No, you're more likely to go into a business where you can lose, say, $1,000 of your investment and still make 3, 4. It's the same in trading. The ratio between a stop loss, for example, a stop loss with 50 pips. In that case, we should have a target of at least 100 to 150 points. And in this case, even if you have an equal number of positive and negative trades, you earn more on positive trades than you lose on negative ones, and it will still drive you to profit. And when we find the ideal possible targets for this setup, that's the only time we enter the trade. Believe me, it is better to make 5 to 10 good deals in a month than 1,000 some questionable ones. These 5 rules will help you a lot in ranking. Be sure to write them down and apply them to your trading.